everyone! Welcome back to our channel where we break down complex financial concepts into easy-to-understand nuggets. Today, I'm going to debunk the top 5 stock market myths that might be holding you back from making some smart investment moves. These myths can be quite misleading and can prevent you from taking the first step towards financial freedom. Let's dive right in. Myth number 1: you need a lot of money to start investing. This is totally false. Many people believe that investing is only for the wealthy, but that's simply not true. Thanks to fractional shares and brokerage firms with no minimum account requirements, you can start investing with as little as a few dollars. The key is to start, no matter how small. Over time, even small investments can grow significantly thanks to the power of compound interest. Myth number 2: investing is just like gambling. This couldn't be further from the truth. While both involve risk, they are fundamentally different. While both involve risk, investing is about researching and making informed decisions. You can analyze companies, study market trends, and use various tools to make educated choices. Gambling relies purely on luck, but smart investors use data and analysis to guide their choices. It's about strategy and long-term planning. Myth number 3: you need to be a financial expert to invest. Not at all. This myth often discourages beginners from even trying. With the plethora of resources available online, anyone can learn the basics of investing. There are countless tutorials, articles, and courses designed for beginners. There are even robo-advisors and financial apps designed to make investing as simple as possible. These tools can help you create a diversified portfolio with minimal effort. It's all about continuous learning and staying informed. The more you learn, the more confident you'll become in your investment decisions. Myth number 4: the stock market is too risky. Sure, there are risks, but that doesn't mean it's too risky to invest. Every investment carries some level of risk, but understanding and managing that risk is key. Diversification is key here. By spreading your investments across different sectors and asset classes, you can minimize risk and increase your chances of steady returns. By spreading your investments across different sectors and asset classes, you can minimize risk and increase your chances of steady returns. A well-diversified portfolio can weather market volatility better than a concentrated one. Finally, myth number 5: you need to time the market perfectly to make money. Timing the market is extremely difficult, even for seasoned professionals. Trying to predict market highs and lows can lead to missed opportunities and increased stress. Instead, focus on time in the market. The longer you stay invested, the more you can benefit from the market's overall upward trend. Historical data shows that long-term investing usually outperforms short-term market timing strategies. Historical data shows that long-term investing usually outperforms short-term market timing strategies. It's about riding out the ups and downs and staying committed to your investment plan. It's about consistency and patience. The market will have its fluctuations, but staying the course can lead to substantial growth over time. So there you have it, folks. We've debunked the top 5 stock market myths that often hold people back from investing. The top 5 stock market myths debunked. Now you have the knowledge to make informed decisions and start your investment journey with confidence. Remember, investing is a journey, not a race. It's about making steady progress and learning along the way. Start small, stay informed, and don't let these myths hold you back. Every small step you take today can lead to significant financial growth in the future. If you found this video helpful, give it a thumbs up and subscribe for more insights. Your support helps us create more content to guide you on your financial journey. Until next time, happy investing. Stay curious, stay informed, and keep investing wisely.